Hi all, hope everyone is doing well. Welcome back to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. We help you put your money where your mouth is and invest healthily in companies that align with your values. In this video we will be breaking down the Oatly Q3 2021 earnings report. We will view the quarterly performance compared with estimates, look into the financial statements. Then, we will review leadership commentary, examine forward guidance, review the chart, and end with our final thoughts. Be sure to watch the video through the end where we share one of our most favorite metrics to evaluate plant-based foods companies. Before we launch into the video, please give that like button an early smash. It will be a big help to grow the channel. If you have found value in plant-based portfolio videos, please subscribe and click the notification bell to make sure you don't miss any content. Awesomeness. Without further ado, let's get into it. In Q3 2021, Oatly, ticker symbol OTLY, pulled in $171 million in revenue, missing estimates by 8%. EPS came in at -7 cents, beating estimates by 3 cents. This is really interesting. Though Oatly's revenue miss may point to sales problems, the EPS beat demonstrates strong management. This means that even in the face of lackluster sales, the management team has found a way to operate the business more efficiently than expected. Also keep in mind that the Oatly shareholder lockup period expires today. This means that pre-IPO shareholders, including angel and venture investors, are now free to sell shares of Oatly. Those looking to cash out immediately will likely do so this week, and we can likely expect some selling to continue throughout the quarter. Shifting over to the earnings report, let's start with the highlights. Again, we prefer to use 9-month data where available because its utilization decreases the impact of short-term market fluctuations. For those of us who are long-term investors, using long-term data for analysis is advantageous. Net revenue of $457.3 million was an increase of 55% year over year. Gross profit was $125.4 million with a gross profit margin of 27%, which is down from a gross profit margin of 32% a year ago. This is the kind of revenue growth a growth company should have. That being said, gross profit margin decline is not good and is likely related to the rising cost of oats. Be sure to check out our recent video on how Oatly can 10x, where we describe a solution to the rising cost of oats for Oatly. Dropping down to the regional segmentation data, we see that for Q3 2021, EMEA or Europe, Middle East, and Africa, sales increased 23% compared to last year. In contrast, sales in the Americas increased 87% during the same period. Finally, sales in Asia increased 98%. This shows that Asia continues to be the highest growth market for Oatly, closely followed by the Americas, and EMEA a distant third. We would expect continued investment in Asia and the Americas by a strong leadership team. Okay, shifting down to the operating statement, let's view 9-month data here as well. Gross profit grew about 33% year over year, despite gross margins decreasing from 32% in 2020 to 27% in 2021. Here again we see the effect of inflation and commodity prices. Viewing the expenses, we see that research and development costs nearly tripled, while selling, general, and administrative costs rose about 125% year over year. The net loss was $133 million in Q3 2021, which is a worsening of year-over-year net loss of nearly 500%. Sheesh mech jeesh. Now looking at the balance sheet. Here we see $1.7 billion of total assets with $403 million in cash. Assets outweigh the $310 million in total liabilities, indicating that the company manages its finances very well. This is what a strong balance sheet looks like. Okay, onto the cash flow statement. Losses from operations were $149 million and losses from purchasing property, plant, and equipment were $187 million. So the free cash flow is negative at about $336 million for 9 months of operation. Extrapolated to an annual basis, we can expect Oatly to burn $448 million a year. With $403 million in cash on hand, This means we can expect Oatly to raise more funds immediately, either via debt offerings or issuing more shares. Given the healthy balance sheet and the current low cost of capital, a debt offering might be possible, but don't be too surprised if Oatly issues more shares to raise money. So now let's go to hear what the great CEO Tony Peterson has to say. Global consumer demand for our products continues to be strong and grow as we expand production and increasingly scale our operations. The robust third quarter revenue increase reflects broad-based growth across geographies and sales channels. We are pleased with our ability to continue to be a leader in driving growth and sales velocity for the plant-based milk category within our key markets. This positive momentum was partially offset by temporary headwinds as we scale our global production capacity, particularly in Ogden, Utah, and as we manage through pandemic-related restrictions and temporary food service closures in Asia. Despite this near-term variability, we remain very confident in our ability to meet the rapidly growing global demand for our products. Here Peterson lays out the situation in an honest and thoughtful manner, noting the challenges that lay ahead. Specifically, he notes the regulatory constraints in Asia, Oatly's fastest growing market. As for the 2021 full year guidance, Oatly expects revenue to exceed $635 million, representing an increase of 51% year over year. Keep in mind how strong that revenue growth is in comparison with Beyond Meat, which is expecting a revenue growth of just 16% for 2021 in their best case scenario. So now looking at a favorite metric in the cash conversion cycle, we can see that it took 74 days for Oatly to get paid by their customers, 64 days for inventory to be sold, and 59 days for Oatly to pay their suppliers. This results in a cash conversion cycle of 80 days. Looking at Oatly's cash conversion cycle over the past couple of years, we see that the values are increasing, which is a bad trend. This is because as decreasing cash conversion cycle values indicate better efficiency in acquiring goods and producing product. Jumping to the year-to-date chart, we see that the share price has been trending down from a 52-week high of $29 per share to its all-time low of $9.05 after Q3 2021 earnings. Clearly the market did not like the earnings results. Final thoughts. Despite missing expectations, Oatly's revenue growth has been outstanding. Additionally, they managed to produce better than expected EPS numbers. Again, this demonstrates the strength of the leadership team and Tony Peterson specifically. However, they are going to have to figure out how to curb oat costs and will likely raise money in the coming quarters. And with the lockup expiration occurring today, expect the share price to get beat down this quarter. The good news is that this may present Q4 2021 as a prime opportunity to start and/or build an Oatly position. As we enter 2022, there is literally nowhere for Oatly share price to go but up. Many thanks for watching. We hope you enjoyed this video and found it informative. If so, please subscribe, like, share, and comment below. We would love to hear your thoughts on Oatly, their earnings, and plant-based stocks. Join us in the next video and don't forget to put your money where your mouth is and invest healthily.